Are you following the recent Adani stock crash? Do you want to know what the future holds for one of India's largest conglomerates? Look no further. In this video, we'll be diving deep into the reasons behind the Adani stock crash and discussing the prospects of the company. Get ready to learn about the controversial Carmichael coal mine project, the impact of the report from Hindenburg Research, and more, all in one informative and entertaining video. Adani Group is one of India's largest conglomerates, with interests in ports, logistics, agribusiness, energy, and real estate. The group is headquartered in Ahmedabad, Gujarat, and is led by the Indian billionaire industrialist Gautam Adani, who used to be the world's third richest person. Over the years, the group has expanded its reach and has become a significant player in various industries, both locally and internationally. Before hopping on to the Adani stock crash, we would request you to please like and subscribe to the channel, as this will help us in making more informative and insightful videos for you. A closer look at the stock market shows that Adani stock has underperformed compared to the broader market and has seen a significant drop in its price. Despite the recent crash, the stock still trades at a high valuation, reflecting investor optimism about the company's prospects. Starting with the technical analysis, Adani stock has seen a significant decline in recent months and is currently trading near its 52-week low. The stock has been underperforming the broader Indian market, and investor sentiment has been negatively impacted by a series of recent events. Moving on to the fundamental analysis, Adani Group's financials show a mixed picture. On the one hand, the company has a strong presence in several key industries and has a well-diversified business portfolio. On the other hand, the company has a significant amount of debt, and the controversies surrounding its major projects have raised concerns about its financial stability. Finally, looking at the market sentiment, investor confidence in the Adani Group has been negatively impacted by recent events and controversies surrounding the company. This has led to a decline in the stock price, and investors are becoming increasingly cautious about investing in Adani. So what led to the Adani stock crash? The $126 billion empire, built by the third richest person in the world, plummeted to nearly half of its monetary value, and that too within days. The main reason behind this was a combination of several factors, such as increased regulatory scrutiny, concerns over high debt levels, negative sentiment in the market, and most importantly, the report by the financial research firm Hindenburg Research. Regular scrutiny has always been a major concern for the Adani Group. The company has faced numerous allegations of environmental violations and unethical business practices. Moreover, the company has a large amount of debt that needs to be repaid to maintain financial stability. All these things, along with turbulence in the Indian stock market, have led to the build-up of negative sentiment and a huge decline in investor confidence. Now, moving on to the report that has been a nightmare for the Adani Group, leading to a huge $100 billion in losses. But before discussing how this report has literally vanished half of Adani Group's wealth, we would request you to please like and share the video, as this will help more viewers to watch our video and take benefit from it. The Adani stock crash can be traced back to a report from US-based short seller Hindenburg Research. The financial research firm alleged that the multinational conglomerate involved in port development and operations in India had engaged in stock manipulation and accounting fraud over the last few decades. After what it called a 2-year investigation, the report accused the conglomerate of brazen stock manipulation and accounting fraud scheme over the course of decades. The Adani Group vehemently refused the claims, calling them nothing but a lie from the Madoffs of Manhattan, in a 413-page report that failed to soothe skittish investor sentiment and rein in a rapid sell-off. Following this, the Swiss lender Credit Suisse was reported to have stopped accepting bonds of Adani companies as collateral for margin loans to its private banking clients. Additionally, Citigroup's CN Wealth unit has also stopped extending margin loans to its clients against securities of Adani Group. The market regulator SEBI is now examining a recent crash in Adani Group shares and looking into any possible irregularities in a share sale by its flagship company. Additionally, the Reserve Bank of India has asked Indian banks for details of their exposure to Adani Group companies. These events have raised concerns about the financial stability and business practices of the Adani Group and have contributed to a decline in investor confidence. This, in turn, has led to a drop in the stock price of Adani and has had an overall negative impact on the Indian stock market. Another factor that has impacted the Adani stock is the controversy surrounding the Adani Group's proposed Carmichael coal mine project in Australia. The project has faced opposition from environmental groups who are concerned about its impact on the Great Barrier Reef and the local ecosystem. The opposition has led to delays in the project, including numerous legal challenges as well, which has added to the negative sentiment surrounding the Adani stock. These controversies have put significant pressure on the Adani Group and have led to a decline in investor confidence along with a significant impact on Adani's stock price. Investors are becoming increasingly conscious of environmental and social risks and controversies surrounding major projects like the Carmichael coal mine project and report from Hindenburg, etc. All this has led to a negative impact on the company's stock price. While the recent crash has been a cause for concern, it's important to take a long-term perspective when it comes to investing in the Adani stock. The company has a strong track record of growth and a diversified portfolio of businesses, which will provide stability in the face of economic uncertainty. Additionally, the group's strong financial position and ability to raise capital will help it weather any future economic challenges. Starting with the industry outlook, the Indian economy is expected to continue its recovery from the COVID-19 pandemic, and Adani Group's presence in several key industries, including energy, ports, and logistics, positions the company well for growth in the coming years. Additionally, the Indian government has been making significant investments in infrastructure, which bodes well for Adani Group's ports and logistics business. Moving on to the company outlook, Adani Group is well positioned to take advantage of the growing demand for energy in India and has made significant investments in renewable energy. The company's focus on sustainable energy and its commitment to reducing its carbon footprint will likely be well received by investors who are becoming increasingly conscious of environmental and social risks. However, the company is also facing significant challenges, including increased regulatory scrutiny and negative sentiment in the market. Controversies surrounding the Carmichael coal mine project and allegations of stock manipulation and accounting fraud by Hindenburg have raised concerns about the company's business practices and financial stability. In conclusion, Adani stock has a mixed outlook and investors can expect both growth opportunities and challenges in the coming months. Despite the recent controversies, Adani Group's presence in several key industries and its commitment to sustainable energy are positive signs for the company's prospects. However, the company is facing significant regulatory and market challenges, and investors should proceed with caution when considering investing in Adani stock. The recent Adani stock crash may present an opportunity for investors to buy into the stock at a lower price. The Adani stock could be a good option for those with a long-term investment horizon, as the company is likely to benefit from the growth in the Indian economy over the next few years. Additionally, the group's diverse portfolio of businesses and strong financial position make it a relatively safe investment. Starting with the energy sector, Adani Group has made significant investments in renewable energy, including solar and wind power. With the Indian government's focus on reducing its carbon footprint and increasing the use of renewable energy, the Adani Group is well positioned to take advantage of this growing market. Moving on to the ports and logistics sector, the Adani Group has a strong presence in the ports and logistics market in India and has made significant investments in expanding its operations. With the Indian government's focus on infrastructure development, the demand for ports and logistics services is expected to grow in the coming years, and Adani Group is well positioned to take advantage of this growth. In addition, Adani Group has a well-diversified business portfolio which provides a buffer against market volatility and risk. The diversification also provides opportunities for growth in multiple industries and helps to reduce the company's reliance on any one sector. In conclusion, Adani Group provides several investment opportunities for investors, including growth in the renewable energy sector, the ports and logistics sector, and its well-diversified business portfolio. However, investors should also consider the challenges faced by the Adani Group, including increased regulatory scrutiny and negative market sentiment, and proceed with caution when considering investing in the Adani Group. That's it for today's video. We hope you found this information informative and useful. Whether you're an experienced investor or just starting out, it's always important to stay informed and make informed decisions. If you have any questions or comments, please feel free to leave them below. Do you think the Adani Group will be able to come out of this loss, or will they become a thing of the past? Let us know in the comments below. Additionally, I would recommend watching this video, as this will help you take the right investing decisions at the right time to get the returns that you have always wanted. Don't forget to like and subscribe to our channel for more insightful and informative content on the Indian stock market. Stay tuned for more updates on the Adani stock and other top companies. Remember, investing in the stock market involves risk, so always do your research and consult a financial advisor before making any investment decisions. Thanks for watching. Stay safe and happy investing.